Are tax settlements fair? You can settle your personal or business debts in bankruptcy, but you can't settle student loans. You can, however, settle your taxes with what the IRS calls an offer in compromise. Now, to be upfront here, most people do not qualify to settle their taxes. And why? Because the IRS determines your settlement based on your ability to pay, and if you can pay your tax debts within the 10 years that the IRS has to collect on the debt. They look at your equity and your assets, your income, and your allowable living expenses. They compare that with the debt and that 10-year time frame that they have to collect on the debt. If by liquidating your assets and combining that with the disposable income, which is your income after allowable living expenses, you cannot pay the tax debt, then they're gonna settle. Is this real? Yes. I've done many of these over the years. Now, these can be massive. I've personally seen $10, $50, $100, over $400,000 saved with a tax settlement. There is a catch to these settlements, though. Essentially, for the next 5 years, you got to be a good kid. You got to file and pay on time. If you don't within the next 5 years, the IRS can come back and make you liable for the original debt plus penalties and interest. On one side of the coin, everyone's got to pay their taxes. Why do these select few get to get away with these settlements? On the other side of the coin, let's give these people a second chance. Maybe they were down and out. Now they can get back up on their feet and start living life. Let me know your thoughts.